year do we look back and say like, well, this was really helpful for just making it easy to grab some operators and have some slashing sort of, back end logic running. But like, we're not seeing restaking enable net new things, right? Does it enable net new things, right? Does it provide a way for products like to differentiate? But first we have to just get the, 0 to 1. We're still not there. And just like we saw, a year into like, let's say like the Cosmos Hub and ICS, we'll just see like how much sort of momentum continues to carry once we've actually are in production and, the demand side gets flushed out. Takes a while. So I would just say stay patient. Don't jump to any like hard conclusions about this being all a meme or not yet.
Agreed.
Hasn't actually started yet.
Hey everyone, this episode is brought to you by Sei. After several months of effort, Sei's V2 launch is live. Woo! Let's go and introduce the first high-performance parallelized VM to the world. Stay up to date by following Sei at Sei, that's SEI Network, or you can experience the speed firsthand at sei.io today. Thank you very much for being a partner to Bell Curve Sei.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another episode of Bell Curve. This is a season finale wrap-up of the restaking season that Miles and I have been doing. Miles, buddy, another season in the books. And this was a good one.
Another one done. Yeah, lots changed since the beginning of the season. I'd say, general sentiment on everything has gone down. Not just restaking, just I think we woke up today to a nice 20% drop in the market. And so, maybe the excitement on all these like big narratives and themes, including restaking, has kind of dampened, but that's okay. I think we learned a lot.
Yeah, this episode is being recorded at a funny time. This is for like the 20 nerds who still care about restaking and aren't reading one of 178 threads on the yen carry trade unwinding. But for those of us who are still in the trenches here, we wanted to do just a review of some of the takeaways that Miles and I had during the season. And for folks who have been following along, the different themes that we were interested in going into the season is sort of the shared security history and value proposition. So where has, what's kind of the history of shared security within crypto architecture? Where is it, and sort of lessons learned from some of the earlier attempts in Polkadot and Cosmos, and how that's translated into some of these newer platforms like Eigenlayer and Symbiotic and Jito, et cetera. Then we were very interested in the market structure and sort of looking at this, the different dynamics that were popping up in between the marketplaces themselves and the supply and demand side. So, the actors there are the actual marketplaces, but then there's LRTs, AVSs, and operators. We called it different things at different times throughout the season, but we were really interested in looking at internal and external use cases, or feature addition type use cases versus this sort of yield generation securing external networks. And I think that's where like the meat of what we're going to be talking about here. There's, I think, at least my perspective has changed a lot. I think yours has there as well. And then finally, restaking platform positioning. So when we started this season, this was really, and Eigenlayer obviously still is the bellwether, of this entire space. They've got kind of like an Uber type name. Eigen is just associated with restaking, but we've had Symbiotic and Jito since launched their marketplaces, and so we're going to do it's just interesting to see how these different players are now positioning themselves. But before we get into those themes, I think it's interesting to even just talk about, you're absolutely right that when we started recording the season, the sentiment of the entire crypto space was in a very different place than it is today. But I think that restaking is particularly emblematic of that, just because there was so much excitement, there was so much TVL that was flowing into Eigenlayer, and you're getting all these, grandiose threads about what it was going to do, not only for Ethereum, but, Eigenlayer and all this yield that it was going to generate. And now I think maybe the bloom coming off the rose is a little bit strong, but I think people are much more aware of some of the issues around restaking as a use case, and they're maybe questioning how big this market ultimately is. So I mean, Miles, if you had to kind of sum up, I mean, how would you define that kind of shift in sentiment?
Yeah, I think it makes sense because I think it was a supply side story, right? For
As
a
it so
long
often
time,
is
as
in
it always
crypto.
is. Yeah, as it
It's
starts
always
like
a
that.
supply side story. Yeah, yeah.
So, okay, the supply side, and then there's lots of sort of like excitement, rationalizing why this is a great supply side story, why you should be, depositing your ETH into these restaking platforms or depositing lots of assets in the restaking platforms. And then, over time, it starts slowly and surely, the focus shifts to the demand side, right? And that is where I think, a lot of sentiment has, or like a lot of like I don't know, the criticism has come, is starting to like actually think about, okay, how big is the demand side? Can it ever, I guess, grow to the point where it can support the amount of capital that is entered on the supply side? And then more like existential sort of questions start coming up, like, well, I've never heard any like customer come and say like, or like a portco come and say, we can't gain customers because we don't have enough economic security, right? That's the general sort of like skeptic. I guess that's probably the main message, right, on the skeptic side. And yeah, I do think that that's a very fair question to ask. But I would say that, there's different shades of like how to look at this question. It's, okay, sure, that has not really been an impediment to like Chainlink gaining adoption, right? But would some of these networks have paid less of their overall supply, right, if they were bootstrapped via restaking? Would some of these networks have, greater levels of accountability on the operator side if they were part of like a standardized system that everybody kind of really understood well? And then, because it's just so easy to go pick up, operators and stake and set up an off-chain network, do we think that there's going to be net more, right, of these networks that will exist in the future than there otherwise would be had restaking never, or these programmable staking platforms, we'll call them now, because it's not always just restaking, right? If they never existed. And I think that overall it's just still really early. Like restaking has died and like come back to life a few times over the course of the season, and we still don't really have a single AVS in full production, meaning like payments going through, slashing, is turned on. And so just tell everybody, like, take a deep breath. There's still we're still in like, I don't even know if we're in the first inning, top of the first. So let's just see how it plays out over the next 2 or 3 years.
Yeah. I think maybe to skip to one of these themes that you and I were really interested going into this season is kind of this internal versus external use cases. And I think the way that people, at least certainly I was thinking of use cases for restaking going into the season, is this idea of rehypothecating, staked ETH and then using that to secure these external, maybe it's middleware type services or other L1s or sequencers or whatever it was. And then there was this other bucket of internal use cases where, internal from the perspective of Ethereum and saying, hey, maybe we can actually, use this as a primitive to allow ETH's operator set to opt into providing all of these other services that aren't dictated by EIPs, right, or mandated by the protocol. And we're kind of looking at, okay, well, are there other MEV boost type use cases that might end up being really significant? And that's why restaking and pre-comps have really intersected in terms of conversation and narrative, and why there's some overlap there in terms of interest. But now I think that was maybe the wrong way of framing things, because again, looking at that from the external use case, there's just a very supply side oriented argument, because the implicit question is, how can I generate more yield on my ETH? But I think if you look at it more from a demand side approach, when you're launching a network, there are all of these things that need to work on the back end. And there's like the sourcing of the operator set and scoring them and doing all that type of stuff. But then, even beyond that, there's like, where does my token belong within my network? And what are critical points of centralization, right? If I'm building something that is like kind of very base layer close to the metal infrastructure, that I could leverage my own token or some combination of ETH or Solana or another token to actually decentralize those core parts. And I think, to their credit, if you go back and listen to the episode that we did with Misha of Symbiotic, this is the message that they are really pushing. And so I think that's really the only type of restaking that exists. This idea of external versus internal, it was really a supply side argument oriented from the perspective of ETH, but it's really just kind of back end. And I think that's also why Eigenlayer is pivoting to this language around cloud, viewing themselves as like a cloud computing type thing, because it just implies like, hey, when you're launching a network, there are all these back end things that need to happen. And I think that's what restaking platforms are going to sort of turn into. Does that resonate?
Yeah, I think that's totally fair. I would say there's actually 3 categories of restaking use cases, if I had to go back and kind of like correct ourselves. One is just standing up new networks, off-chain new networks, right? Come into a platform, grab a couple operators, design some sort of quorum, and quorum rules, right? And you're off and running. That's a lot faster than it used to take to spin up an off-chain network. The second one is, I would say, like decentralizing things that parts of a protocol that's already an existing protocol. So we talked to the Jito guys. That's a great example of they have, let's say, like the auctioneer role, right, in their MEV system. That takes some centralized like human interaction, right? They have to like actually hit distribute. Could our like product be improved if we decentralize this particular role? Like if the answer is yes, then great. Okay, now here's a super easy way to do that. Again, you go in, grab some operators, design a little quorum, right? And now you have decentralized that part of your protocol. And then the third is, I think, this feature addition thing. I still think that's different. It's basically the operators of a protocol, giving them the ability to create and opt into new protocol rules, right? That aren't like enshrined as part of like the main protocol. So it's saying if I'm a proposer, I can create this rule saying, here I go, I can sell like my future, proposer rights, and I'm opting into being held accountable to do that, right? I see that as different than the other sort of like internal use case, which is just decentralizing like existing parts or parts of existing protocols. And we may never see, honestly, the feature addition use case. Like it's very like it would, there's a lot of adoption that needs to happen, a lot of opt-in for any of these things to be useful at like the the proposer level. We may never actually get there. I think it's pretty path dependent. And if we did try to get there too early, like we've also heard how this could actually, potentially be an even worse outcome, right? Like kind of once you have figured out a way to sell future proposer rights, it's really hard to like, I would say, put the genie back in the bottle, and maybe that has a really bad outcome. We talked about this with Lucas about like PBS, right? Like once that was, introduced, there was no going back. And so we, you obviously have to be like super cautious about the feature addition side of things. And that is part of the reason why it may never happen as well. It's like probably very political. But there's, I think the former two, right? Just standing up new off-chain networks and decentralizing parts of your existing protocol. That's, I think, we'll see a lot of that.
Hey everyone, this episode is brought to you by Sei. Sei believes that the EVM is here to stay, but they also believe that the EVM in its current iteration lacks performance and scalability for developers. Sei's recent V2 upgrade has introduced the first high-performance parallelized EVM, which has coupled lightning-fast block times and finality of just 390 milliseconds. That is sub 400 millisecond block time. Very, very cool. This V2 upgrade unlocks a new design space with 100x the throughput, even the fastest EVM L2. So if you're a developer who spent most of your time building an EVM, you can now build on Sei, faster block times, much quicker finality. You get a lot of the benefits of the environment that you're used to. So if you're a developer, definitely go check them out. And thank you very much, Sei, for sponsoring this episode. Where did you wind up thinking about, what are your current thoughts about just pre-confirmations in general? And there's been a lot of, because within that feature addition, right, allowing proposers on a network like Ethereum to opt into providing these new services. There is a question of why does it have to be the Ethereum proposer set itself, right? Why can't it just be a quorum of other, service providers?
Yeah.
And I think the reason why pre-comps are particularly interesting is because they have this valuable, basically economic right. They've got the block monopoly, right?
Yeah.
And so that's why they can do. That's why I'm sympathetic to the idea that really what makes sense is pre-confirmations. On the other hand, pre-confirmations are one, they have these undesirable. First of all, it's very complex. It feels, again, I don't mean to be a hater. There are lots of great pre-conf, startups that are building out there, but it feels a little bit like a science project. And I think there's definitely a perspective here, which is people are excited about pre-confs for the value accrual to ETH perspective, as opposed to being something that the market actually wants or users or applications actually want. But where did you kind of wind up thinking about pre-confirmations as a category? How exciting is it?
Yeah, I think there's so when you think of pre-comps, I think L2 pre-comps are the first thing that come to mind, right?
Yeah.
But I think there's also, if you go kind of deeper into the weeds, you can imagine this world of like generalized pre-comps, including, dApps on L1, right? Or users of dApps on L1 buying the rights to something. Like let's say, maybe a pre-comp can facilitate like an app like Aave, right? Making sure that selling off like making sure that their liquidations are top of block and like selling the right to execute that, right? Maybe it's Uniswap, exerting its leverage to say like, okay, we're going to sell off, the first Uniswap transaction of the next block. And this is like MICAM, is I think the name of the MEV system that was proposed, where you can basically sell off the first transaction of the next block, but if you don't place that at the top of the next block, the rest of Uniswap transactions do not go through. Something like that to me actually is a little bit more compelling from a demand side story, just because I don't necessarily hear like the existing roll-up ecosystems jumping up and down for pre-confs, or would-be roll-up devs saying like, okay, now that we have pre-confs, I can build my base roll-up. So I'm a little bit more skeptical of like that side of pre-confs, but I do think there could be something interesting here where, it allows, I'd say, like the apps that make up the majority of valuable activity on L1. You could use pre-comps to like recapture some of the value that would otherwise just go to the proposers. That's always made sense to me. But again, I think, it's very early and haven't heard from the dApps themselves, right? And until we hear them saying, okay, we're building this for ourselves because this sounds great, right? I'll probably be a little skeptical.
There's the other thing that's happening in tandem to this is there's a lot more excitement around multiple concurrent proposers than there used to be. And this is, I think, an idea that originated in Solana with Anatoly, but now Max Resnick has been pushing on Ethereum. My sense is that there's more buy-in than there used to be. And it's still very early days. We haven't, I don't think, seen any concrete specs come out of either camp. But the reason I think it's interesting for this conversation is it represents kind of two different design philosophies here, where I think this impacts how people are going to think about PBS, because PBS basically says, all right, there used to be just a proposer here who would actually build the block themselves, and there was the right to propose a block, which is valuable, and then there's all the work that you need to do to actually build that block. And I think there was the correct realization that some specialization of tasks or labor makes sense here. So now more and more tasks are just getting outsourced to these block builders, right? And the idea is that the network is still decentralized because the proposers are still, there's low hardware and bandwidth requirements for them, and we just outsource to a special builder. And now we're kind of chucking more and more critical tasks for the network towards builders and relays. And then there's another solution to that, which is, okay, what you actually could do is just break up that monopoly, that sort of financial right. And you and I have talked about this. It's almost like the right to a medallion, right, for a taxi. And you can just take that away and actually make the proposers compete by having multiple different entities proposing to the same block at the same time. And so then you don't really need this really strict division of labor, which has become a little bit centralizing on the builder and relay side of things. And instead you're making proposers compete with each other for inclusion. So in theory, it's more censorship resistant. I think the I think honestly, the Solana camp is interested in this for a little bit of a different reason. It's less about censorship resistance and more about just building, they're really interested in getting around that 200 millisecond, time that it takes an atom to travel around the world. But yeah, I think that, if we were revisiting this entire season in a year or so, I think depending on where MCP ends up going, I think that'll be significant to pre-comps as an idea as well.
Yeah, I agree. Because I feel like it definitely is going in the other direction versus like, I would say, a lot of the feature addition, use cases of restaking that we were talking about with proposers is giving, the proposer who has the monopoly even more power, right? Giving like, providing a way to be even more expressive about the blocks that they're proposing. And frankly, giving, I would say, like more voices a say in getting, their transactions into the block. If it's not just, a searcher, it's looking at L1, ARB opportunities, or like SexDex ARB. It's now like L2s trying to like, pay for priority blob space. It's, actual like individual dApps paying for placement within the block. That could be very interesting. And as usual, like it already is happening in Cosmos. And so you can look at like Osmosis right now, where it has mempool lanes, right? And so it's using restaking basically to have proposers run an Oracle sidecar, place that at the top of the block, and then they run a top of block auction where anybody can, bid to have that right. And then you have standard transactions, and then, the proposers are also running on a different piece of software to back run, I would say, like, like all the AMM transactions and imbalances in pools. So it's very, very low stakes compared to Ethereum. Obviously, it's a single dApp chain. But it could be interesting to start looking at, like, what are sort of the ramifications of that on a smaller scale. How does it, just the implementation work? Does it actually benefit the app, right? So yeah, very different setting, but I'd say like that's the first like usage of this in the wild.
Yeah. Per usual, Cosmos is just way ahead of their time.
Right.
As always.
Some things will work, some things won't, right? But they're going to try it anyways. So, which is why, it's a fun ecosystem to be in, apart from the dysfunction occasionally.
All right. So speaking of Cosmos, one of the other, I think, interesting lines of thought that came up during this season is, and this is a little bit related to this fun question of whether or not economic security is a meme. And actually, we're done with the season, but I think we're lining up a pretty awesome bonus app for everyone that we were hoping to get as part of the regular season, but we'll just tease it here. It'll be worth tuning in for. But I think this idea of like some of the issues that I think are being more widely understood about vanilla proof of stake. And there's kind of the spectrum of vanilla proof of stake, delegated proof of stake, and then just straight up POA, proof of authority or proof of governance, that type of thing. And I think people are starting to question, maybe especially for chains either, closer to the beginning of their life or that have a very different end state than the sort of global distributed compute system like Ethereum. Maybe actually these POA constructions are the way to go, at least in the beginning, or even potentially as an end state. And in that instance, do we really need, like, how useful is this concept of economic security, right? And is this really just, this is kind of the Tolly point, is the security the actual boxes and sort of this combination of the reputation and future cash flows of the operators? And so, I don't know, I thought that was a pretty interesting topic that came up this season. And maybe the more that you move towards POA, the less useful this concept of economic security sort of is. I mean,
sure.
Where'd you shake out on that?
I think Togirl did a good job of describing like the layers of security. It starts with, the outer shell, right? Is, I would say, I think he said it was economic security. I would maybe make that a little broader. Like, there's a layer here where it's just some security around the operators. And that could be economic security, right? Like in the form of stake that is delegated to the operators to keep them accountable. It could just be reputation, right? It could be a combination of reputation and economic security. And then there's the middle layer, which is the protocol security. So like the rules of the protocol, keeping people like actually accountable. And then there's the social layer, which is kind of like the ultimate fallback. If anything really goes wrong, you can always kind of rely on the social layer. And the question was, well, how actually meaningful is that outer layer of economic security, or is that outer layer more reputation based, right? And I think it kind of it's kind of a cop-out answer, but it's like it depends, because if you do feel like your protocol would benefit from having a permissionless operator set, right, which most L1s, that is kind of like table stakes, right, then economic security is important because you don't know who these operators are. You have no way of tracking them down or keeping them accountable in off-chain ways, like suing them or pursuing legal action, right? But then there are other more narrow use cases, and frankly, like many use cases in the early stage, right, that kind of benefit from having higher levels of control and opinionation and gating that operator set. Then there's the question of, okay, if it's gated, you know who these people are, what is the incremental value of throwing some stake at them versus the incremental cost that you're going to pay for that stake. And so I think it's all very fair, like criticism, especially when the sets are gated. But we'll see. We really do not know if economic stake keeps these operators more accountable than just calling it like proof of authority or proof of governance. But I do think maybe over the course of the season, because of the skepticism around like economic security, being a meme, maybe it's now socially more acceptable to launch as like POA or proof of gov. I just think we'll see a lot more experimentation with people, now kind of being like, guys, it's a meme. We're just starting off as POA, right? Which is probably good too, right? And then we'll have more sort of like information in front of us of like, okay, did the POA, do we see any sort of like catastrophic, issues with the projects that took the POA route compared to those that did like a gated operator set with some stake? We'll see.
Yeah, and I think this is a pretty interesting question to just think about and ruminate on, because you and I have talked about this even in the context of 51% attacks and stuff like that, because there's all of this. So just economic security is not a complete meme, right? I don't even think Tolly really believes that at this point, just because there are these obvious attacks that you could perform. But I do think there's kind of an interesting question about how much should protocols just count on the legal systems in jurisdictions that they operate. And so like, I think a 51% attack would just be straight up illegal. And a lot of the attacks that economic security, guards against, they're pretty much just illegal. And so,
right. And if you're gating your set, like you have like the ability to review and evaluate operators. And so,
right,
what are the chances that you like, evaluate an operator, say, yeah, this guy looks good, and then they perform a 51% attack? Like, you probably could have sussed that out if you have like that level of control over the operator set.
Pretty low, I think. Yeah, hence why it's not as useful for POA. But in some sort of permissionless system, like a proof of stake type system, yeah, I think even there is this. There is a, let's say you're like, I'm comfortable relying on global, legal and regulatory systems. I think the more global you are, or you assume that your base of operators is, the less you can probably do that. But then even in instances where maybe you're not spread around a bunch of jurisdictions and the legal systems where your operators are domiciled out of is actually pretty good, it's still pretty timely, right? Like it still takes time. And so we talked to Ludwig, who's building this sort of, it was actually what you referenced in sort of based applications. They're building this just kind of more out of protocol, right? Angstrom, which is a way to auction off the optionality of trading against LPs at the top of the block. the reason why they're interested in restaking is because any of this sort of quorum of auctioneers that they're recruiting could theoretically run off if the lever that gets extracted on one trade becomes too big. And okay, you could rely on the legal system to have your back there, but it's really expensive. Maybe it takes a lot of time, and you just don't want to deal with that as a protocol. And frankly, it's just much easier to procure some cheap economic security. So I think I think maybe we have to watch some black swans play out there. And in the same way that Mount Gox imploding ended up being kind of super bullish for dexes, and it's also probably not one of the few shining bright light metrics that's happening right now in crypto is the percentage of dex trading volume as a percentage of sex is going up. I don't think it's crazy to assume that had something to do with the failure of FTX. And so, I think there probably will over a period of time. Maybe we just have to watch, some very high profile Overton window shifting failures of the legal system to enforce some of these rights for people to say, you know what, maybe it's worth it to procure some economic security here, especially if you can do it in a capital efficient way, which I think EigenLayer and Symbiotic and Jito on these platforms enable. So
yeah, I agree with that.
Just a trade-off.
Yeah, I'd say like if it's permissionless, you definitely need it. Like the operator said, if it's permissionless, anybody can become an operator. Anybody can, basically, like there's liability basically with people you don't know who are running the system. That makes a lot of sense. And then on the other end of the spectrum, I think Sunny was the one who pointed this out. It's when you're relying on a single operator, right, to do a task. Rather than some sort of decentralized quorum with checks and balances. I think like a market maker, filling a user's, instant bridging like ask, right? And then having the funds held in escrow and released to them. That's when it makes sense to have some sort of economic security backing the protocol as well. And even better if the value that is being, put up as collateral can be redistributed to any user that ends up being harmed, right, by that operator running off with the capital. And so I think that's the next point is saying like, okay, when you have like single points of failure and let's say, that capital, like no honest user will ever be harmed because there's always enough capital that can be, redistributed. That to me seems like a great end state outcome, and pretty hard to argue with from the standpoint of, hey, this makes the product better. Like, and I think that's been one of the criticisms as well. It's like, does this actually make the products better? Would the products be fine with the current systems or with no security? And I think it's, if you're, taking on some amount of risk as a user and one product says, hey, you're basically insured. So like if anything goes wrong, you're gonna get your money back. And the other product says, well, we're kind of banking on their reputations. It's like, well, I'll probably go with the one that I can get my money back if those reputations aren't strong enough, or like that reputational system isn't strong enough and something goes wrong. So yeah, excited about that. Now I think hard to argue it.
Miles, that's a really good point, because one pushback that I think is really appropriate for this line of thinking, which is just, ultimately at the end of the day, these operators are very well-run businesses and they have reputation and future cash flows at stake, so they're going to act in this perfectly rational way. I would just point out that line of thinking, especially when it comes to financial services, gets you in trouble. This is the Alan Greenspan thing. Banks would never know they're smart entities run by competent people who are financial experts, and they would never blow themselves up until they all blow themselves up in the end and need to get bailed out. So, and there's just so many instances of corporate fraud and malfeasance over the years that I just don't think that that's a particularly strong argument in the long run if we're trying to build a really anti-fragile, robust system here. And so I think this idea of insurance, maybe restaking and insurance moving a little bit closer, is a very interesting one. One new mechanism that I wish that we had talked about a little bit more is this idea of StakeSure, which is coming out of the EigenLayer team. Super, super interesting idea. Can you just give us a quick high-level overview of StakeSure?
Yeah, StakeSure, I think the TLDR on StakeSure is that you've got this enormous pool of capital, right, that's been deposited into EigenLayer. There's got to, some amount of that capital is going to be, you're basically going to be able to like self-insure any sort of action that you're taking on chain. And you can do that, as an end user, you could do that on behalf of your end users as a protocol. And so what this basically says is, okay, this is not just normal stake. Like, this is not going to get in a slashing event. This is not going to just get slashed and burned, right? Maybe I have a large number of, total stake that's securing my protocol. This is the cost to attack, right? But a much smaller amount of like actually redistributable capital. And a big part of StakeSure is like actually looking at how much security you need as an L1, and like how much like capital is actually at risk that the protocol rules themselves cannot protect, or the protocol rules themselves and the social layer cannot protect. So it's like a subset of capital that basically is, if reverted, right, people would lose money elsewhere. So this is like why Coinbase, waits a week before letting you actually withdraw USD from like a USDC transfer, right? Because there's a week where, a lot of whatever is on chain could be reverted or by a proposer, and then Coinbase has already sent you the USD, right? And it's in your bank account. There's no way to recover that for them. And so what this is saying is, there's some subset of capital that, if there was a chain reorg, somebody else, and you've like prematurely, right, settled the other end of that off-chain trade, you're kind of fucked. Like, there's nothing you can do, right? And so what if you actually like allow end users to measure, and by the way, and there's no way to like measure throughout on like a global level, how much of capital is at risk at any given time because it's so individual, right? But if you could like, you could start from a bottoms up sort of method with the end user being able to actually measure, how much capital is at risk at any given week and insure yourself from it. And so what I imagine is like, if you've got like $20 billion of TVL in Eigenlayer in 2 years, let's say it's just flat, there's probably most of that is going to be, like have some sort of most of that is going to be subject to some sort of slashing, and like a small subset of the total slashable value is also going to be able to be, redistributed. And so I just think it's where StakeSure gets like interesting is, how will the market price capital that, could be redistributed in case of a slashing event versus capital that would just be slashed and burned. And I do think they will price it a little bit differently. Just because I think you're taking on a little bit more risk if you're saying, okay, somebody could actually hypothetically benefit from causing a slashing event, right? If they figured out how to be the claimant on the other side and attack your protocol. And insurance historically, like on-chain insurance has not been a totally great story. No. I think
it's been tough.
Yeah, exactly. So anyways, that's the TLDR. That's what excites me about restaking longer term, and just having spoken to, AVS builders, like Lucas from Ethos, like Ludwig, that we had on. I think that's what they are seeing as like the long, really sticky long-term value prop of restaking, because it could make their product better over another product that doesn't have this sort of insurance, right?
I agree. And, there's some part of me as well, which is it feels intuitively, again, going back to the cloud analogy here, I do think that there's some element of what restaking is very back-end heavy, if that makes sense, in the same way that cloud is as well. And, if you were asking, well, hey, what does having Azure on the back end mean for Salesforce's product? It's like, not that much, but actually that doesn't mean that it's not particularly useful. And in the case of restaking, I think, or shared security or whatever, I do think that you do have these interesting use cases that actually will impact the product experience, which is the insurance stuff that you're mentioning, and that second use case of restaking, which is decentralizing some critical parts of infrastructure.
Yeah. And just going back to that cloud analogy, I think the other part that the Ludwig called out that I think is important, especially to respond to the skeptics, is him saying like, hey, this is like something I need. It's not core to my business. It's not core to my product. Like, yeah, I know, I get that. It's not like my customers are demanding I have this, but we need it. And I don't want to build this out. I don't want to dedicate tons of resources that could otherwise go to the core, application, right? To build out this thing I kind of need, but it's very non-core, right?
Right.
And so there's like a cost, sure, there's like maybe a supply sort of savings value prop, but there's also like a cost of time and resources value prop here, where I think, we're seeing like Jito and Symbiotic especially saying like, no, use your own governance, turn your own governance token into a staking utility token. I think that's totally legitimate and should, dApp builders be spending tons of time to build out their own customs, everybody having their own custom sort of staking backend? Like, no, like, great. That's now, something you could just grab off the shelf and again, focus more of your time on your core app. So
there's a lot of funny stuff in crypto, which is just people arguing. Whoever said this, that a huge percentage of arguments in crypto is just operating on different time horizons is kind of how I feel about the modular versus integrated debate as well. And I mean, I think we pointed it out on this show before, but even if you listen to a lot of the proponents of something that's more integrated versus something that's more modular, it's people that come from like a cloud background or something like an Apple type background where everything is integrated. And there's many different ways to skin a cat. Probably both approaches have a lot of merit, even over the long term. But in historically, what has played out, and this way you had like on-prem software, right? That was the entire market, and then it ended up getting more and more, the cloud ended up eating a lot of that market share when people figured out there was common infrastructure that you could leverage. And so,
yeah, totally.
You got to remember that when people are screaming at you that this is the only way to do it, and they're making religious arguments out of just like pretty technical implementation details. It's just
totally
fun.
Totally.
So yeah, let's talk a little. Oh yeah,
no, go for it.
I was just going to say, I do think one of the, maybe looking at the segmentation, like, so let's you and I put ourselves in the position of an actual marketplace, and we're looking out there into the wide world of AVSs. I think that maybe Symbiotic having Misha on, it seems like the customer segment that they're attacking is less kind of like new startups that are just getting their start and need to bootstrap a network in day one. Maybe that's one customer segment. And then another one is actually large existing protocols, which are looking to do sort of a more sophisticated evaluation of their back end, so to speak,
sure,
and looking to decentralize core parts of the protocol. And critically there as well, we talked about kind of this idea of AVS as a narrative, and are people buying a narrative or a go-to-market strategy? And I think there's actually a large, for that second customer group, which is already large and established and maybe has a user base and a brand and an identity, they don't maybe actually want that. And so
yeah, right.
Maybe a good example of this would be some of the work that Symbiotic is doing with Athena, to decentralize different parts of their. So what do you think about those two different customer segments and sort of this branding approach?
Makes sense. I think there's a real question of like, will the winners be based on quality or quantity? And I think the EigenLayer, kind of drawing this analogy to the cloud and microservices, kind of points to a vision of thousands of these microservices, right?
Yeah.
Just like we have in Web 2 with thousands and thousands of different sort of like SaaS, applications now that are super narrow and specialized in what they do. And that's one vision of the future versus, and maybe creating a, messaging and creating a platform that's meant to facilitate that sort of future, which is having everything in one place, right? All the logic, all the capital parked on ETH-L1, and making it really easy to come and spin these up, super fast. Whereas Symbiotic is like, no, we think we're going to bet on quality over quantity. We're going to build a product that we think is, best aligned to target the big sort of projects out there, and saying like, no, take your own instance of this system and create it, how you want it to, right? This is not like come into the Eigen platform, here are the rules, blah, blah, blah. And I think, that ends up kind of looking like Uniswap, where it has like lots of different deployments on different L2s that have really nothing to do with each other, right? But I think that's maybe more appealing to larger projects. They're saying like, okay, I don't have to be like part of this, on the Eigen platform, like subservient, like in brand, right, to Eigen, by like being a consumer, right? I can just kind of take this. And then with Jito, I think it's a story of dog fooding, and seeing like a lot of really obvious use cases for restaking within your own products, and then seeing how a restaking product can be extraordinarily like have tons of synergies, right? Like if Jito, let's say, uses its product to decentralize some component of its MEV system, and it says, we're going to decentralize this component that we used to do. We're going to have operators, kind of running the system, and you're going to stake your Jito Sol to secure those operators. Well, like, great. Now that's a huge driver of demand for Jito Sol and a big utility, sort of like a sticky sort of utility for Jito Sol. And so like that to me is really interesting, because if you were to ask like the Eigen team, let's say 6 months ago or a year ago, like, hey, what do you guys think about Flashbots as a customer, right? As an AVS, they'd be like, yeah, that's the dream AVS. Like that is, or something with MEV boost, right? Or we are like really core to the whole system. I think Jito's like, well, yeah, that makes a lot of sense. We can do that ourselves. And so how much, kind of pops up around Jito's dog fooding of its platform is very TBD. Kind of depends on how many use cases beyond like keepers and oracles there are on Solana right now. But you landed the whale because you are the whale in terms of the customer. And so that's one way to go about it that I think is super interesting.
Okay, there's a lot to unpack there. One, before we get into Jito and this idea of vertical integration, which I think is very interesting, just one note on we heard this both from Symbiotic and EigenLayer, that they're trying to create an ecosystem for their AVSs. And I think one of the lessons, we didn't really talk about this on shared security in general, past iterations, is one, they almost always got the demand side of the equation wrong. So it was almost always overestimating the demand side. In the case of Polkadot, they thought that people were going to pay a lot of be willing to pay a lot of money to win these parachain auctions and lock up, block space for a long period of time. The other thing that I think has been a noted challenge is this idea of adverse selection. And you see this in Cosmos a lot, these sort of consumer chains versus, full stack chains that don't need the security of the hub. And then you risk just graduating, right? It's kind of like SNL, right? It's a good place to launch your career, not a great place to stay. And so I think all of both the marketplaces understand this dynamic today. And so they're interested in kind of creating this ecosystem and doing different value-added services. And I think if you squint at a lot of crypto today, you can see a lot of bundle type business models, and it feels easier to just, I'm sure that some of these will work and they'll be great, but I will say running a bundle is very challenging. And I think where there's some, on the other side of that is that you see this dog fooding, this creation of an application, and then the underlying infrastructure itself, something that looks like, Amazon and AWS, right? Where they actually spun up a very large e-commerce platform, and then they realized in creating this application that they could actually sell the infrastructure to that. And I think there's an analogy there with Jito and actually EigenLayer itself, because we were talking about how actually EigenLayer, the whole genesis of restaking, came from trying to solve the data availability problem that was going to, I think Shriram was really prescient in identifying that was going to be an issue for rollups. And Jito came at it from the perspective of they were kind of the MEV shop on Solana, and still are, but they were the first ones to really try to dig in and tackle that problem. And I think they very shrewdly understood the flywheel that occurs in between MEV and liquid staking, because if you have an ability to auction off the yields and increase the yields for validators, and that's really good for LSTs. There's like a nice little flywheel that kicks in there. And then when they have this mass of extremely core infrastructure, which is really close to the middle of just how Solana operates, they're probably saying, well, it would be nice if we didn't have complete control over all of this, right? So they kind of started with this actual application, and then they're realizing that they dog fooded their own app, and it looks less like a bundle to me, which I like. And it's vertically integrated is like a bad word in crypto. There's this kind of dogma around it where people like these very thin, unopinionated protocols. And I'm less and less am I convinced that that's the right way. that's the right way to go. I don't know. I see it. I really get it for something like Lido, but I don't know. It's just interesting that they're.
I was going to say the same thing. Yeah. And I think the Lido sort of thin, unopinionated, approach is reflected with Symbiotic, right? I think Symbiotic is trying to be as thin as possible and just trying to, I don't see them putting out tons of first party products, right? Or first party AVSs. Maybe they will, maybe I'm wrong, but I do feel like they're kind of like, okay, we're going to make this thing as configurable and, basically what the customer wants. And we're going to put it out there and we're going to try to minimize, the rest of the surface area. Whereas EigenLayer is more trying to drive network effects home, by putting out all of these complementary products and services. So it starts with EigenDA, but I think there's a couple more in the works that aren't necessarily products like EigenDA is, but it's complementary services to the AVSs. So it's saying, okay, it's kind of trying to create this larger cohesive story of the benefits coming on the platform. And I don't mind that at all. I think it's probably it's probably a good decision on their step from their side right now.
I think that there's kind of an interesting discussion to be had here around this idea of thinness and fatness, right? The original, I think, language that was used here, this was fat protocol thesis from Joel Monegro of Placeholder. And it's interesting that for core protocols, a lot of the design philosophy has actually moved away from that. And you see that in Ethereum, which wants to be increasingly thinner and less opinionated layer. You see this in Lido as well. And I do think for some applications that makes sense. Like you probably want that for your money, right? Like a really thin, neutral, valueless layer. I think that makes a lot of sense. But just like we did on the supply side for Bitcoin, we've probably extrapolated that to too many different places. And I think value capture comes from fatness. And this is like, basically, if you want to take on a really complex problem and actually solve it, there's almost always value there, as opposed to saying someone else solve it. Because if someone else solves it, they're going to have solved it and they're going to be able to extract value from that. And this is the constant tension between open source software and the companies that are built on top of it. And I think if you look at areas of crypto which are, less opinionated, more neutral, they look more like public goods, and there's value that's being built on top of them. And maybe one example of this would be Uni versus, this is the kind of the tension that exists between Uniswap, the token, and Uniswap Labs equity. And you can look at the fees that the Labs portion is doing. They're printing it. They're doing extremely well. And I think Jito is another interesting example of this, where it's a much fatter layer. They're doing a lot of things, but it opens up all these really interesting opportunities. And so I don't know.
I think it's a super interesting tension. Like, I think it's one way to frame it is like the more things that rely on you, almost like the more like apps, activity, users, people that rely on you, almost like the thinner you want to be in some sense, just to decrease, any real or perceived sort of platform risk. Like Lido, right, is trying to be just like a, one block, right? Like one building block that's really close to the middle of Ethereum. It wants ETH to compete with ETH, right? And so it wants to create, it wants to have a system that is as close as possible to, kind of emulate ETH itself, right? In terms of how hard it is to change, how thin, the sort of decision or the human touch points are, and how hard and, the protocol gets over time. And I think with EigenLayer, you could argue that it's pretty close to the middle too. And in a successful world, there is going to be a lot of activity that's sort of sitting on top of it, right? And so that's going to be a really interesting tension of like, I think, how do you take a sort of active, opinionated, approach, building complementary services while also trying to, mitigate any real or perceived platform risk. And I think that's happening right now, right? It's like you've got almost 50 AVSs building, and It's like, well, or want to put out like the slashing spec, right? Well, if you put out something without it kind of like soliciting feedback from everybody building on top of you, then maybe they feel rugged, right? If you put out something that breaks a whole bunch of designs that they have, and now they have to go back and, redo everything. And so I think these things are really important to nail early on, and then to figure out just like how they evolve over time. Does it make sense for eigenlayer governance, let's say, to be like owning EigenDA, the marketplace, and first party services like 2 through N, right? Or should you, if the marketplace becomes such a critical dependency for so much activity on top, should that really have its own sort of thin layer, like try to be thin, right? Versus things that are built on top, like similar to Uniswap and Uniswap Labs right now. I think that stuff really matters. So
I agree. I think it's a difficult tension. Even something like Farcaster with, it's trying to bootstrap a network of different clients, and they dog-fooded with Warpcast, but then maybe all of the network effects just end up accruing to Warpcast. And it's like, well, do I really want to compete against, the team that designed everything? So it's tough. Right. And Lido's the most interesting example of this to me, because it's the one that I've always really liked. I think a lot of, when you look out into this world of DAOs, the governance structure of the protocol is actively working against the product, whereas Lido is probably the one where the product and the governance setup is most aligned, I would say. And I don't know how Ethereum's ultimately going to end up, solving this whole debate around issuance and, what the distribution of stake should be. I've always been a fan of Lido. I like them, and I think their design is really elegant, and I think they're experimenting with governance. They've got dual governance, which is, I think, rolling out this year, and it makes sense for them to have a really flat structure. The other thing is they have the use case is kind of money. That's what they're sort of competing for. And I think that's where this flat governance structure makes a lot of sense. But in other areas, like you just look out into the world and, okay, what has what is like really neutral? And it's things like, Swift, and Swift's a great product. Everyone uses it. It's totally neutral. But all the value built on top of systems that leverage Swift.
Right.
So right. I don't know. It'll be an interesting. It'll be interesting.
I agree. Yeah, I think. Well, none of these things have even really like launched governance or anything like that. But I do agree that like all projects should kind of done what Lido has done and work backwards from, okay, like what is the product we're selling? What sort of operating structure and org structure and decision-making processes like actually make sense for this product? And with Lido's case, it's, trying to compete with ETH. So you just minimize sort of that's any sort of like governance related risk as much as possible. If you're building a consumer app, you probably want to move fast and iterate on product without like having lots of issues with, having to go through governance, right? So we'll see how that plays out across the restaking, landscape. But I think that's more or less right.
Yeah. All right. So in closing here, Miles, what do you think we can be looking forward to in the restaking ecosystem? Like if we were to be hosting this podcast a year or two from now, what can we expect? Obviously, these platforms will be live. I mean, like Jito, Symbiotic, and Eigenlayer here are going to be live, and hopefully there's going to be more AVSs that we can actually talk about in production that are leveraging these marketplaces. We haven't really talked that much about. I think a big miss this season was we really talked to any operators. Frankly, that would have been a really interesting perspective to have in the season, and maybe there'll be more robust ecosystem of sort of LRTs and teams that are managing risk across these things. But what are you looking forward to in the next year or so?
Frankly, like just seeing the real thing in practice, in production, live, fully featured, and then seeing each platform get to that stage where everything is actually, in production, and then seeing, I think, just we can start to sort of benchmark on the economic side, which would be super helpful. Like if we see that on average, hopefully like these payment terms and economics are all super transparent, but like how does it compare to a Cosmos chain, like historic, the numbers that we're seeing, how do they compare historically to Cosmos chains? What do the operator sets end up actually looking like? How sophisticated do we get with sort of quorum designs and slashing conditions, all of this stuff? Or in a year, do we look back and say like, well, this is really helpful for just making it easy to grab some operators and have some slashing sort of, back end logic running, but like we're not seeing restaking, enable net new things, right? Does it enable net new things, right? Does it provide a way for products like to differentiate, right? This is something like with the insurance piece that we were talking about. But first we have to just get the, 0 to 1. We're still not there. And, I think that just like we saw, a year into like, let's say like the Cosmos Hub and ICS, we'll just see like how much sort of momentum, continues to carry once we've actually are in production and, the demand side gets flushed out. Takes a while. So I would just say stay patient. Don't jump to any like hard conclusions about this being all a meme or not yet.
Agreed.
Because it hasn't actually started yet.
Yeah, I would say that I agree. We just have to see this stuff in production. We started this podcast off by saying that sentiment has shifted a lot, and this always happens in crypto. There's these crazy sentiment shifts, and just in the same way that you probably should have been a little bit cautious and skeptical when people were proclaiming restaking was the second coming of Jesus H. Christ, you should probably be a little bit skeptical that it's all a meme and that it's overvalued and useless, and probably neither one of those things are true. And so there are really great teams that are working on this. Also just the long history of shared security iterations, should tell you that this is something that networks need. And so I'm interested in actually just seeing, what ends up coming to fruition. As we close here, I just wanted to give a quick update for longtime listeners of Bell Curve. We are actually going to be taking a break from seasons here. I posted something on this about Twitter, maybe just doing more ad hoc episodes, and got a lot of positive responses there. So yeah, not that we'll probably have seasons or maybe mini seasons or just return, when inspiration strikes in the future. But for now, just going to be going and lining up a couple of episodes, and to actually just tease the episode that we mentioned before as a kind of a bonus extension onto the season. We're going to have Toli and Sriram on here talking about economic security and whether or not it's a meme. So I'll build on some of what we covered today. Also going to be doing an episode with Anatoly and Max Resnick on multiple concurrent proposers. We're going to have Mark Zeller on here talking about Avenomics and this resurgence in DeFi 1.0. And then Frankie from Paradigm and Eugene Chen of Ellipsis talking about their new sandwich-resistant AMM. So got a lot of bangers lined up, and Miles, you and I will get some great recordings in there, and maybe tease some personal announcements of yours in the coming months. So that'll be a lot of fun. I'm looking forward to it.
Me too. It was a really fun season. Now, maybe you'll see me again on one of these like flavor of the week sort of a one-off podcast, because we love doing
flavor of the week.
Something like that. There you go. You got a jingle.
I don't know.
But it was a lot of fun, buddy. And we'll be back for the special bonus app. I'm excited.
All right. This is going to be a blast, dude. All right, partner. I will see you. Cheers.
See ya.
All right, guys. One more shout out here to this episode's title sponsor, Sei. There are a ton of reasons to build on Sei. If you're itching to get started building or using the ecosystem, head over to sei.io. That's sei.io. Get started, and be sure to let them know that we sent you. Thank you, Sei.